Dear students, last time we have seen the paper pattern of financial accounting as well as content of the syllabus prescribed by the university for first year Bcom first term. All of you are aware that the university has applied a choice-based credit system since from the year 2019, and all of we are under the 2019 pattern students. Last time we have discussed the paper pattern, the examination pattern, the practical approach, and practical theme followed under this paper. So today onward we are required to see the content of syllabus which is prescribed under this paper for our first term. So friends, our first topic is piecemeal distribution of cash. So for considering this topic, piecemeal distribution of cash, we are required to see some basic aspect of accountancy and accounting. All of you are aware that the basic concept of accountancy, in which the journal, ledger, journal posting, ledger balancing, opening of account, cash book, etc. And those aspects which we learn, all of you learn in 11th and 12th, its next part will be studied by all of you in first year BCom, second year BCom, and third year BCom. So, for considering these aspects, we are required to recapture some aspect of the accounting and accountancy. All of you are aware that accounting is based on three basic rules, and these rules are rule of real account, rule of personal account, and rule of nominal account. Rule of real account is debit what comes in, credit what goes out. Rule of personal account is debit the receiver, credit the giver. And rule of nominal account is debit all expenses and losses, credit all income and gains. These are the basic rules, and the accounting and accountancy is based on these three basic rules. As well, you know that the characteristic feature of a double entry accounting system. In double entry accounting system, every transaction have two-fold effect. One is debit and another is credit. The debit having corresponding credit and vice versa, credit having a corresponding debit. By considering these basic things, we are required to see that this topic of piecemeal distribution of cash. Till the time all of we have seen that the realization of assets and discharge of liabilities took place on the same day when the business come to an end. Last year, all of you learned that the partnership accounts. In that, admission of partner, retirement of partner, dissolution of partnership firm, etc. When you have learned this aspect, at that time all of your assumption was that when the business is come to an end, that day all the assets are realized, and on the same day all the liabilities are disposed of. But this assumption is, however, impractical, as in practice, actually it cannot happen. The realization of asset is part by part, as well the assets are sold out as and when the asset have demand in the market or asset have marketability. It means assets are realized gradually. It means these are receivable or received in piecemeal sense. As well, when the organization is required to pay the amount to the creditor, that time creditor will not sit quiet till all the assets are realized, and ultimately they will demand their dues as and when the firm has funds. Thereby, the organization is required to make the payment to the creditor part by part. As well, the amount is required to paid out to the creditor when the organization having availability of funds in gradual basis. And when the payment is made on gradual basis, as and when available to the organization, that process is called as a piecemeal distribution of cash. And organization is required to make a piecemeal distribution of cash when the cash is available with the organization. But when organization is required to make such a type the payment, that time also it is not on the will of organization. Means the question is arise as to in what order the liabilities of the partnership firm should be paid off. For this purpose, the liabilities are classified in two categories. One is external liabilities and second is internal liabilities. So we are required to see that what is external liabilities, what is internal liabilities. The external liabilities means the amount which is due to outsiders. When the amount is due to outsiders, that liability is called as external liabilities. When the dues to the outsider, that time these dues are also classified in two categories. One is preferential creditors and second is secured and unsecured creditors. Then we are required to see that what is meant by preferential creditors, what is meant by secured creditor, what is meant by unsecured creditors. Preferential creditor means those creditors which having preference for making the payment or payment due to them. That creditors are called as preferential creditors. That preferential creditor consists of any government dues, any amount due to employees or amount payable as realization expenses. All of you are aware that the organization entitled to make certain payment to the government as the dues to the government, such as the GST tax, any type of levy, means any amount propitiation tax, etc. Means any amount payable to the government by the organization is called government dues. Some of the amount is payable to some employees by their as their right. As well, when the organization dissolve, that time some of the expenses are incurred. That expenses are called as realization expenses. It means these are the preferential dues and these preferential dues are paid out in priority basis in at the time of dissolution. On the other hand, some of the creditors are the external creditors that consist of secured creditors and second is unsecured creditors. Secured creditors means those creditors who having some security, means they have some pledge, some mortgage on some asset of the organization. That creditors are called as secured creditors. Suppose organization is taking the loan from bank and for that loan the organization has given the security of the building of the organization. That time these creditors are secured creditors. Contrary, on the other hand, some of the creditors are in the organization. These creditor have not any security given by the organization. That creditors are called as unsecured creditors. And second is internal liabilities. Internal liabilities means those liabilities means those amount which is payable to the partner as the loan provided by the partner and the capital account balance of the partner. This is called internal liability. When loan provided by the partner is considered, that time the loan provided by the partner only is considered as internal liability. But if any of the relative of the partner is providing to the loan to the partnership firm, that time it is not internal liability. It is third party liability. By considering this aspect or by classifying these liabilities, the amount is paid as and when dues to them. Then question again is arise while making the payment or distributing the available cash among the various claimants, the following order is required to be followed by the organization, in which first priority is given for payment of realization expenses. In respect of making payment for realization expenses, some point is required to be noted while making the payment. If expenses are given, then these expenses are to be deducted from the available cash on priority basis. But sometimes if the expenses are not given, then there are necessity to make some provision to be made, and that provision is to be made from the available cash on priority basis from the available cash. Means first priority is to the realization expenses. Then second priority is to make the third party liability payment. While paying the third party liabilities, some point also to be noted for making the payment of third party liabilities. The first payment is to be made to secured creditors from the securities which is given for them. Secured creditor, we have seen that. Secured creditor means those creditor to whom some asset is given as a security by the organization. Such creditors are required to be paid out from the amount realized from that secured security is to be used for making the payment of such secured creditor. If the payment of secured creditor is made full sense from the amount realized from that asset, that time no question is arise. But if amount is less than the required amount, that time remaining amount is treated as unsecured creditor, and this amount is paid as and when the unsecured creditors are being due for making the payment. Second is preferential creditors should be paid from the available cash after making the payment to secured creditors from the asset which is realized, of which is given as a security. After making the preferential creditor, those amount is available with the organization. This amount is required to be used for making the payment to unsecured creditors. Means unsecured creditors are to be paid out after making the payment to preferential creditors. Again, question is arise how this payment is to be made to unsecured creditors. Suppose cash available is less than the amount payable to unsecured creditors, and if unsecured creditors are more than one, that time the amount is required to paid out in the proportion of their claim. In the proportion of their claim means proportionately amount is to be paid to unsecured creditor as and when available for distributing to the unsecured creditors. After making payment to unsecured creditors, next claim is contingent liabilities. All of you are aware that some of the liabilities are in the business which will uncertain, means such liability will may be or may not be. So organization is required to make provision of contingent liabilities from the available cash when the payment is made to unsecured creditors. Means provision is required to be made for contingent liabilities, and this amount is required to be set aside because the amount of contingent liability will be uncertain and it will depend upon the situation. After making the provision of contingent liabilities, those amount which is available for distribution is to be utilized for the purpose of making the payment of a partner's loan. Means partner loan is internal liabilities, and such liability is to be paid out from the available cash after making the payment of all the priority payment order. After making the payment of partner's loan, those amount which is available for distribution is utilized for making the payment to partners capital. At this stage the question again arises how the partners capital is to be paid out. If the partners are contributing their capital in their profit sharing proportion, then no question is arise to make the payment to the partner for repaying their capital, because their capital sharing ratio and profit sharing ratio is equal. Ultimately, when the amount is paid to the partner, available amount is paid to the partner in their profit sharing ratio or capital sharing ratio, both are same, no question is arise. But when partners capital sharing ratio and profit sharing ratio is having difference, then question is arise how the payment is to be made to the partner from the available cash. For the purpose of making payment to partner's capital, under the piecemeal distribution of cash, two methods are followed. One is a surplus capital method and second is a maximum loss method. But according to the syllabus which is prescribed to us, under this syllabus, only surplus capital method is applied and thereby we are required to consider the surplus capital method and accordingly see that how the payment is to be made to the partner for repaying their capital under surplus capital method. Under surplus capital method, the accounting is made by preparing two statements. One is a statement showing surplus capital and second is a statement showing distribution of cash. So we are required to prepare two statements. One is statement showing surplus capital and second is statement showing distribution of cash. So it is necessary to understand that how the statement showing surplus capital is to be prepared, how the surplus is to be ascertained, and what are the rules for preparation of surplus capital statement and for making the payment to partners for disbursing their dues which are with the organization. So next time we will see that how the surplus capital statement is to be prepared and how the amount is to be distributed to the rightful claimant as and when the amount is due to them. So friends, we will see all these aspects to the next time and consider this payment or payment to be made to the rightful claimant as and when the amount is due to them. By this way, today we have seen here the basic introductory aspect of piecemeal distribution of cash, meaning of piecemeal distribution of cash, need of piecemeal distribution of cash, the types of liabilities which are considered for making piecemeal distribution of cash, and order of priority payment which is to be followed for making the payment to rightful claimant as and when the cash is available with the organization. Thank you.